Hi, everyone. So, welcome to the live stream today. Very much excited for having you on the section two in our discussion on the single entity financial statement. Yesterday, we started with a discussion on single entity financial statement where we tried to add the pieces together on how the accounting standards are put together in the extraction of financial statements. So, this is the part two. In case you missed yesterday's lecture, you can check the description of this video on YouTube and you'll be able to watch the part one where we did all the workings, and then the part two today will be sensible for you or will make more sense for you in that case. I see some of you guys joining. You are welcome to the stream. Give us a thumbs up when you join. It helps us a lot to push the video so we can reach many students who together we can assist a lot of people. Sorry for that feedback. Let's see. I see some questions coming in. Let me pick them real quick. In that regard, let me know. Give me a thumbs up on the video. Put in the chat any questions you have for me. Let me have them real quick. Whatever questions you want to hit me with, I'm here for you. Hit me with the questions. Let's go. Um, Philip Mark Osra said, can you please make a video on the examinable areas in Introduction to Management Accounting? Introduction to Management Accounting, there's going to be question on standard costing and variance analysis. There'll be question on budgeting. There'll be question on issues about costing methods, costing systems rather, and that is going to be the issue about absorption costing, marginal costing. There'll be question on the accounting costing methods, job costing, batch costing, process costing, those things. One of them are going to be in the exam hall. Then definitely working capital management, there is always going to be a question there. So if you ask me about the introduction to management accounting, examinable areas, if you look at the syllabus, each segment of the syllabus, 99.9% of the time, there is going to be a question coming in from each of the segments of the syllabus. So you cannot just pick and choose. Each of the topics there are going to be relevant. So that is it about that, Philip. Each part of the introduction to management accounting syllabus, there is going to be a question coming in from there. Ahaz Timothy said, good evening, sir. Good evening, Timothy. He says, it's like I'm writing in August. Oh. Okay, that's fine. If you are writing in August, that's okay. Like I say always, it's very important for you to assess yourself and identify that, hey, I'm not cut out for this time around. So let me rather write the exams at the time that I'll be okay. I will be well prepared for it. So if you're going for August, be true to yourself and then just go in there in that case. But we still have about 4 weeks to go for the April 2022 examination. And if you feel that you can also work out because your statement means it's like you're not certain even if you're going into August or you do April. So check it out. Whichever is going to be comfortable for you or favorable for you, you go in that case. But the most important thing is going into the exam hall to pass the exams. That is the most important thing, Timothy. Welcome to okay. Uh, Imoran said, good evening, Nhyira. Good evening, Immoral. Thank you for joining me on the live stream today. Give us a thumbs up on the video, guys. Comment in the chat box any questions you have for me. We're looking at part two of our discussion on the preparation of the statement of profit or loss, statement of changes in equity, and the statement of financial position. In other words, we are looking at how the single entity financial statement can be prepared when we deal with single entities or companies in that case. So let's look at it there. Joseph Bab said, hi, say hello, Joseph. Thanks for joining me on the live stream. Mamosa said, good evening, sir. Good evening, Mamosa. Thanks for joining us on the live stream. You're welcome. Moyo, forgive me if I don't mention your name right, okay? Just forgive me if I don't mention your name right. Moyo said, sir, can you please make a video on the treatment of leases in the lessor books and also on construction contract IAS 11? Lessor accounting. Okay, we will see because we have lecture videos on leases, but in the lessor's books, it's just a flip side of what happens in IFRS 15, though. Okay, we see as we continue if it is possible for us to do that. Then let's see. Construction contract IAS 11. IAS 11 is no longer effective, or you are required to learn it because IFRS 15 replaces IAS 18 and IAS 11. So IFRS 15 replaces construction contract IAS 11. So I don't know where you are at and you are still learning IAS 11, because IAS 11 is actually in IFRS 15, which we have already covered on the channel. So you can check um, the lecture videos on IFRS 15, because we covered that part of the discussion as well. Because IFRS 15, revenue from contract with customers, actually talks about the two things, the IAS 18 aspect and then the construction contract IAS 11 aspect as well. But I don't know the school you are in or what you are studying. So if it is something you're supposed to do, I'm not sure we're going to be covering that on the channel, since it is no longer a valid standard. Some Israel said, "Good evening, sir. Good evening, Israel. Thanks for joining us." Um, Joseph Bab said from Nigeria. Okay, thanks for joining us. Um, Makungo said, "Good evening, sir. Forgive me if I don't mention your name right, okay? Good evening. Thanks for joining us on the live stream. Give us a thumbs up on the video, guys, and please share the video. Let us reach as many students as possible. Like I tell you guys all the time, my objective for doing these live streams and creating this channel and providing these contents is to enable us to be able to assist a lot of students across the country, across the continent, and across the globe, learning accounting and finance and providing them with nothing but the best materials, lectures that they need in order for them to pass the examination. So all we want you guys to do is, as you watch, share the video, give us thumbs up, leave comments. This helps us a lot to really push the channel so we can reach a lot of people and produce better content as well as we proceed with our discussion. Joseph said, "This is my first time being live lecture with you." Okay, Joseph, you're welcome. It's great to have you on. Millicent Boa said, "Good evening." Good evening, Millicent. Thanks for joining us on the live stream. Do you have any question for me, Millicent? If there are any questions, please put it in the chat for me. Kweku Barton said, DB man is also here. Greetings to you, sir. DB man. Okay. All right, DB man. Salute you. Okay. Greetings. I hope you're doing well, Kweku Kwartin. Um, Paul Masuka said, "Much love from Uganda." Thank you very much, Paul. I love you so much as well. We know that we have a lot of students across the continent. So thanks you guys from Nigeria, from Zambia, from Tanzania, from South Africa. Come on, Kenya, Liberia. We really love you as well. And thanks very much for joining us all the time on the stream and also watching the lectures on our channel. Make sure that you share the channel with your colleagues, with your friends, and let's reach many people on that. Now, remember that you can download our mobile application on the iOS store or the App Store or the Google Play Store. Nhyira Premium, just the name of the channel here. On the mobile application, you get access to exclusive lecture videos, blog posts, and other contents that will enable you to pass the examination. So take care and download our mobile application, Nhyira Premium, on Google or Android and start studying on the go as you proceed with your studying. All right, so let me share my screen. Let's get excited about it and then let's start with our discussion. Now, like I said, any questions, please put it in the chat for me. I'm going to be reading all your comments here on my screen and taking all of them. So let's go. Let me bring up my screen and let's get excited about it. Yup. Oh, no. That's better. Okay. So yesterday we were looking at this question on the preparation of the financial statement called Bedu Trading Limited. Like I said, in case you missed yesterday's lecture, you can check the description of this video on YouTube. You will be able to get access to the content in that case. And then if you have any other questions also, you can put it on me. So we've gone through all the footnotes relating to this particular question, did all the workings that we need to do about this question. We saw how we treat the tax for the year in that particular case. And we see how the property, plant, and equipment was also supposed to be treated in that case. We saw how it is being treated for the period under review. And then allocation of expenses, we saw the cost of sales, the distribution cost, the administration cost. We saw how all that should be treated. And then, so that is it about that. Now we want to extract the financial statements for Badu Trading Limited for the year ended as given in the question, which is 31st May 2020. So Badu Trading Limited. Is it Trading Limited or Trading Company? Okay, Trading Limited. I'm seeing a question coming up. I asked question concerning 300,000 of revaluation assets in the previous lecture. Is it asset or depreciation? Is it asset or depreciation? What is asset or depreciation? There is no asset or depreciation. We are told in the question that the effect on depreciation has been to increase building charge by 300,000. So we said that is an excess depreciation. That's an excess depreciation because when assets are revalued, we calculate depreciation on the revalued amount. When you calculate the depreciation on the revalued amount, what it means is that the entity charges more depreciation than it should have originally charged if it has charged depreciation on the carrying amount. So we said the difference between the depreciation on the carrying amount and then the depreciation on the revalued amount is what results into a revaluation surplus. Is what results into the excess depreciation, and that excess depreciation is supposed to be taken to the retained earnings and deducted from the revaluation surplus account. So that is the treatment. So it is not an asset, it is an excess depreciation that is coming in, but it will be treated in the statement of changes in equity as a deduction from the revaluation surplus and as an addition to the retained earnings. So that is the meaning of that 300 there. It is not an asset or a depreciation, it's an excess charge or depreciation that is coming in, but that doesn't make it a depreciation for the year because the depreciation for the year had already been given for building there at 500. Sorry, at 5,000. So that is the issue about that. So, Badu Trading, we have A, that is statement of profit or loss. So statement of profit or loss for the year ended 31st May 2020. May 2020. So let's look at the issue that we need to look out for here. So if you're doing profit or loss, that means we need to bring in revenue. So we go in there and pick their revenue, basically. So revenue there, it's going to be 30,000 as stated in the question. Slashing our currency signs as always. So we bring in revenue. There was no information adjusting revenue. So we bring it up. Now the next item is to less cost of sales, which we've already done workings for. So cost of sales will be picked from our workings 3 here. And if you look at cost of sales, our total figure there, it's 19,650. $19,650. So we subtract that to get a gross profit. So let's do the maths on that. 30,000 minus 19,650. And that's 10,350. Then we're going to be lessing the expenses we have. You can see here we have distribution cost and admin cost. So we're going to bring that up. So that's from workings 3. Distribution cost is 1370. Now that's a subtraction in there. Then we bring in the admin expenses. Admin expenses. Oh, pencil is messing me up. Admin expenses. Again, that's workings 3. It's 1930. You less it up. And it appears that is all. Then you bring in profit before interest and tax. So we subtract it respectively. What do we have? 10,350 minus 1370 minus 1930. I'm getting 7050. Okay. Then we bring in finance cost. Now remember, in the extract financial statement, there is uh, an interest payable figure of 350 there. So that will be finance cost here. Now remember, we are told it is payable. All right. Since it is payable, what is going to happen is that when we go to the statement of financial position, it's going to be featuring also there under current liabilities because it is usually stated there as payable. Usually stated there as payable. So if we go to the statement of financial position, possibly it could go. It's going to be there, but we're going to look at whether there is an information about that we need to think about because I think they have the statement of financial position extract and it's under current liability. So probably it's already included here in their statement of financial position extract. So we subtract that. That gives us profit before tax. So we take that out there. Minus 350. And I'm getting an amount of 6,700. Do we have tax in the question? Yeah, we did workings for tax. I think that's workings 1. This is it. Income tax from workings 1, 2,500. So we bring it up. And then that gives us the profits for the year or profit after tax. So that's minus 2,500. That gives us 3,200. 6,700 minus 2,500. Sorry, 4,200. So this is our income statement. Very sweet, simple, straight to the point. And that is the A aspect of this question. Okay. So you did workings for tax, you did workings for cost of sales, you did workings for distribution, you did workings for admin. So you just bring them in. So once you spend time to do all your workings, you realize that the job becomes easier for you in the extraction of the financial statement. Now, even though B says we should do statement of financial position, we will jump to C to do the statement of changes in equity because if we have not done statement of changes in equity, you cannot get the equity balances to be taken to the statement of financial position. So we're going to jump and go to the C, which is we should prepare the statement of what? Changes in equity. Also for the year ended. 30th May 2020. Now, so that we're going to be bringing the things under equity. So if you check, we have a number of things under equity. Now, remember that this we have here under equity is the balance on 31st May 2020, which is the year ended under review. Which is the year ended under review. So the question we need to ask ourselves is, what are the opening balances? So we're going to be bringing that up. Sorry. But let's look at the items. So we have share capital, revaluation reserves, and retained earnings. So share capital, revaluation reserves, and then we're going to have retained earnings. Usually we could have a total column coming in. So let me shift my workings a little bit. So I can have total column. There you go. So we bring in the opening balances. So balance brought forward will be coming in. Equity was given to us in the question. So there was nothing about equity. We were not told the entity had issue any shares or whatever. So that is going to be 21,000 on equity. Then we need to bring in the revaluation surplus for the period under review. So if we check closely, we are told by the examiner that there are a number of things going on there in that case. So it appears that during the year, they did the revaluation, because if you look at the notices, there was a revaluation of land during the year, meaning at the beginning of the year, there was no carrying amount or there was no amount brought forward for revaluation. Okay, because the revaluation was done within the year. So at the beginning of the year, there was nothing on revaluation. I hope that makes sense. Then we'll come to retained earnings. So the question you ask yourself is, what is the retained earnings at the beginning of the year? Now, if you look at the retained earnings figure here at the closing of the year, it is there as 14,000. Okay, but then the company made a profit of uh, profit after tax of 6,500. So the question you ask yourself is, what is the balance at the beginning of the year? So if we want the retained earnings at the beginning of the year, it's going to be, so retained earnings at the beginning of the year will be the retained earnings at closing. So the balance brought down, which is the closing figure, 14,000, which will include dividend profit for the year. And the profit for the year was an amount of how much? Okay, profit for the year after dividends. Let me put it that way, 6,500. Now you could bring the profit for the year separately, then you add dividend. I getting it? So this is profit for the year after dividend. After dividend. So 14 by 6,500, that gives us 7,500. So this is the opening balance for the retained earnings. Does that make sense? Like I said, we could have brought profit for the year. Okay. Then we less that profit for the year, then we add back dividend so that we can get the opening balance coming in. But that adjustment has already been done in arriving at the 6,500. I hope that makes sense. So that becomes the opening balance for retained earnings, 7,500. So we work on the total columns, and that is going to be 28,500. Let me know if there are any questions. Let me know if there is anything you don't understand. I see some of you guys joining. If there are any questions, you put it in the chat or the comment section, and then you give us a thumbs up on the video, and let's get some engagement coming in there. So that is the opening balance. So note that in this question, we are not giving the opening balance, but you gotta figure it out. And that's how we figure it out. Now, once we have the opening balance, we need to bring in the various items such as the profit for the year. So the profit for the year will go to retained earnings. If you remember, we did it 4,200 here. Okay, it's going to be added. Then during the year, the entity paid dividend of 200, interim dividend. That has to be paid from retained earnings. 200. Then, like we saw in the question, there was a revaluation coming up there in that particular case. So in the question, there was a revaluation of surplus of 5,000. Okay, so that's going to be coming up. So revaluation. Sorry, that will be under revaluation surplus. But then there was a transfer relating to the revaluation surplus. There was a transfer for the revaluation surplus. So we bring it there. So transfer to retain earnings. If you remember, the entity said over depreciation was the 300,000. So we bring that up. And that will be deducted from revaluation surplus and then taken to retain earnings. Deducted from revaluation surplus and taken to retain earning. Does that make sense? Does that make sense? Any questions, please? Any questions? I'm seeing some comments coming in. Boyo said, glad to be with you today. I know you can make me pass my papers. God bless you. Will today lecture be relevant to Part 3 students? Thanks. It's related to accounting standards, so it's relevant there. Joseph Bab said, sorry, sir, dividend didn't show up in the statement of profit or loss earlier solved. We don't bring in dividend. Dividend is not paid in the statement of profit or loss. Dividend is treated in the statement of changes in equity. There is no way dividend comes in the statement of profit or loss. It's always in the statement of changes in equity. So it doesn't affect our profit. Dash for revaluation. Why? Thanks. When you say dash for revaluation, why? What are you talking about? Because there are a lot of dashes for revaluation. So which dash are you referring to? Let me know. Be specific on that as well there. So if we look at it, I mean, we've dealt with everything that has to be brought in the changes in equity. So we get a closing balance. So this 21,000, this will be 4,700. Let's work this out. 7,500 plus 4, 200 minus 200 plus 300. And I'm getting 11,800. And then 28,500 for 200 minus 200 plus 5,000. 37,500. So that is the workings. No, this is not the workings. This is requirement C, statement of changes in equity. Chinwe said, "Good evening, sir. Please, what do you mean by transfer to retain earnings?" According to IAS 16, if we depreciate an asset or revalue an asset, and there is an excess revaluation, more depreciation will be calculated. So the shareholders must be compensated. That is what we mean by the annual transfer or transfer to retain earnings. And it was stated in the question that it is the company's policy to make transfer of revaluation surplus to retain earnings as it is realized. So that is what we mean by transfer to that. Raymond said, "Do you have any real formula for calculation of retained earnings?" When you say real formula, what does that mean? I don't know what you mean by real formula. Retained earnings, anything that relates to equity movement usually goes into retained earnings in terms of dividend payment, profit for the year, revaluation surplus. These items are recognized in the retained earnings. These items are recognized in retained earnings. You are good, bro. Tongue sharp. Okay, thank you. So that is it about that. Let's do the statement of financial position, which is the B aspect of the question. So statement of financial position. As at 31st May 2020. Okay, so thanks for the clarification. All right. Please, can you go over the retained earnings again? That's it. We bring in the closing retained earnings, and then uh, you less your profit for the year from that, because that closing figure includes the profit for the year. So you must subtract it. Then if during the year the entity paid any dividend, it must be added back in arriving at the opening figure. So that is the meaning of that. You bring the closing balance, add your profit for the year, sorry, less your profit for the year, because if it was a loss, then we will have deducted it from it, or we are going to be adding it back to it. So you bring the closing figure less your profit for the year. After dividend, then you get your balance brought forward. So it all depends on wherever you are coming in from. So balance brought forward will be brought, will less or add profit or loss for the year. If it is profit, we add. If it is loss, you subtract. Sorry, if it is profit, you subtract. If it is loss, you add. So let me re-quote these things up. So less or add profit or loss. If it was profit, you're going to less. If it is a loss, you're going to add there. So add if it is loss, less if it is profit. Then dividend paid for the year is an outflow that must be added back. The balancing figure is the balance brought forward, which is the opening balance. This is the closing balance. Balance brought down. So that is the issue there. So if you want an approach, probably that's what you can follow. Is there any second ledger entry of revaluation in the asset valued? I don't know what you mean by second ledger entry. Can clarify that and we can give you an answer there. So let's go to the statement of financial position here. Working with two cash columns. Then we bring in our assets. Then definitely you have non-current assets. Under non-current assets, let's go to the question what we have there. But we've already done this workings for PPE. So we can rather go to the PPE and pick the figures from there. Okay, there you go. So property, plant, and equipment, the total figure is 39,600. So we're going to pick that up. And that's from workings 2. So property, plant, and equipment. $39,600. Okay, so that carrying amount we bring in there in that case. Then we go back to their question. So the freehold, the plant and equipment, the fixtures and fitting, we have bundled all that up. Okay, so then we can go to current assets. As you can see, there are inventories, there are things there. So let's go current assets. So we bring in inventory. Now, inventory is 4,600. Can you see that? 4,600. That will be in the first column. Then we bring in the next item, and that is trade receivables. And that is 7,400. Then we see prepayments. Now, prepayments can be also receivables. And that is 200. Then cash at bank, 700. Sounds good. So that is our items here. Let's add it up. Let's add it up for 600, 7,400, 200, 700. And I'm getting 12,900. We add that to the non-current assets. And that gives me 52,500. And so that gives us total assets. Okay? That gives us total assets. I hope you are getting the treatment. Then we bring in the final part, equity and liability. equity and liability. So when it comes to equity and liabilities, what are we going to have? We will bring in equity. So this is where we go to the statement of changes in equity and then pick the things up from here. Are you getting it? You pick the things up from here. So we have the share capital. We're going to have the issue about the revaluation reserves, and then we look at issues about retained earnings. So share capital, revaluation reserves, and then retained earnings. So from the B aspect of the question, you are picking these things up. So let's go pick it up again. I think 21,000, 4,700, 11,800. 11,800. So we add it up, and that gave us a total that is already here, 37,500. Okay, that's so our total equity is 37,500. Then we bring in the liabilities. Then we bring in the non-current liability. So in the question, what non-current liabilities do we have? We see 8% debentures 2024, 5,200. Now, 2024 there means they will redeem it in 2024. And the nominal figure there is 5,200. So if you look at 0.08 by 5,200, that gives you the amount there. So we bring in current liabilities. Now, note that this question is a little bit vague, like it doesn't have a lot of issues in there, and we have to be quiet on a lot of things here. So it looks like in this question, we are giving the current liability as a one-line item, and that is 7,300. So I'm just going to repeat it again because there is tax available. Remember the taxes from footnote 1. It says that an unpaid under provision, an unpaid under provision. So it means that the main provisions for the year, so we bring in tax, the main provision for the year plus the unpaid under provision. Okay, that becomes 2,500. Because the under provision has not been prepared in that particular case, or has not been paid for. So we need to bring it up there. Yeah, so it looks like we are done. Let's take the debenture here. So 7,300 plus 2,500. I'm getting 9,800. And that is equity and liability. That's 52,500. Okay, so our balance sheet has balance. So that's total equity and liability. So this is the answer to the question. Any questions, please? Any questions, please? So Mumuni said, thanks, sir. You're welcome. Raymond said, in case they don't ask you to prepare the statement of changes in equity, and then you have to work for retained earnings in that case. You have to work for retained earnings in that case. So it means that you may not prepare statement of changes in equity, but you do workings for retained earnings and do workings for the revaluation reserves, or if you have space, you can do it on the face of the financial position. So that is the issue there. How do you then get the figures for the equity column in the statement of financial position? That's what I just said. You have to do workings for retained earnings, do workings for the revaluation reserves, or if you can work it on the face of the financial statement. That's okay there. I have understood why the dash appeared. Okay. What's interest payable? How about the interest payable in the P&L? You have current liabilities here in the question. You have current liabilities here. You're not giving the component of the current liability. So it means whatever liability that is outstanding, chances are supposed to be included there. So on the face of the statement of financial position, it should be part of creditors. Sorry, it should be part of current liability instead. But since we are giving the figure current liability, it appears that it's already there. It's already there. Any other questions, please? Any other questions? So that is the issue about this one here. That's the issue about this one here. So you do this for 20 marks. This is financial reporting, definitely. But the beauty of it is the various workings that we have to go through before we arrive at our figures or arrive at a complete financial statement. That is the real deal when dealing with these issues. That's the real deal when dealing with these issues. Okay. So that's it about that. And let me know if there are any questions. Put it in the chat for me, in the comment section for me as well. I'm going to be answering your questions for you as well there. So if there are any other questions, bring it up for me. Okay, Raymond said thanks. All right. Okay. Okay. So that's it about that. Because of time constraints, I will not be able to pick another question today. So maybe sometime later on, we're going to be picking another question to look at it in that case. Joseph said, my teacher, hi, wishing you all the best from Zambia. Okay. Hello. Thanks for joining us on the live stream, Joseph Mumbi there. Right. So that is the issue about that. So, like I mentioned, when it comes to the single entity, this question we solved was not really hardcore. In other words, we were not having a lot of issues that we have to deal with. I mean, it looks like most of the things were already cooked for us. But even so, it becomes technical, it becomes a bit tricky because you need to then get your opening figure for, say, retained earnings. You need to be able to work out your PPE and find out the carrying amount of the PPE. Then you need to also deal with your tax, because in this question there was an under provision of tax, but the tax was unpaid. Under provision and unpaid. So since it is in the footnotes, we are going to be bringing it on the face of the statement of financial position. So that is the thing you need to understand about dealing with the final account. And I'm going to conclude around here today. And God willing, tomorrow we're going to be meeting to continue with our discussion. So if there are any questions, You drop them. I'm going to be replying to all of them. Remember that you can also subscribe to my channel on Telegram. We're going to be starting with some live stream sessions on Telegram exclusively on Telegram. So if you're on Telegram, you can subscribe to my channel on Telegram. Just search for Nhyira Premium, and you can subscribe to my channel there and be able to get access to that as well. Joseph Bab said, your Instagram page is muted. I don't understand what you mean by my Instagram page is muted. What do you mean by that? I don't understand that. Because I think my Instagram page is live here. So when you say it's muted, what do you mean? It's my Instagram page. Working well. I can't communicate with you on Telegram. It is muted. Okay, you're talking about Telegram. Ramsey, hey, Raymond said, in fact, you are good. Thank you, Raymond. Thanks very much. Joseph said, you are muted. Yeah, if I'm muted, you still search and subscribe to my channel on Telegram. Because if I'm not online, then that is it. But as you can see, this is my Telegram. So you can subscribe to my channel. Just search for Nhyira Premium, the same name on the channel here, and then you'll be able to get me there. Because we're going to be doing some exclusive live streams sessions on Telegram exclusively in that case. But seriously, the question seems simple, but technically loaded. Yeah, Raymond. Like I said, it wasn't having a lot of issues. Like you don't really see the hardcore standards at play in this particular question, but it has a lot of things. But as we continue, we're going to be trying a number of other questions so that you sort of see how these add together in that case. So that is the issue about that. How would I access your Telegram page? Download the Telegram application, install it, and then search for Nhyira Premium. My channel is on Telegram, and then you'll be able to find me on Telegram and follow me. Martin said, please, I can't find you at Telegram. No, I'm on Telegram. I don't know why you can't find me, but I'm on Telegram. As you can see, this is my Telegram account, and you can see my channel up here, right? So, for instance, if you should search for Nhyira Premium, my name is going to come up, and you can subscribe to my channel on Telegram there. So, definitely, you can look at that. I have joined, but I can't type hi. That is your own thing there. Okay, so that is it about that. Thanks very much for joining me on the live stream. And God willing, tomorrow we're going to continue with our discussion. Remember that you can follow me on Instagram as well on the same thing. The discussion is going to be posted there for you to know what exactly it's about. And also remember that you can download our mobile application and get access to the content, the video, so that on the go, once you pick your phone, I mean, everything is in one place. You open our mobile application, you get access to the lecture videos, you get access to the blog posts, you get access to everything that you need for you to be able to prepare well for the examination. That is the purpose for the application. So check it out, and then let's see how we can assist you to prepare well for the exam. So that's it. I'll catch you same time tomorrow as we continue with our discussion. Till we meet tomorrow, stay safe and stay blessed. Bye-bye. Oh, I'm seeing something coming up. Eric Ando said, addition included in the sales is 20 million. Budu has charged a markup on this case. Which addition? I don't understand. Included in the sales is 20 million. Budu has charged a markup of 20% on cost of sales. What is the meaning? Like, what is the premise of the statement? I don't get it. Included in the sales is 25 million. Budu has charged a markup of 25 on cost of sales. What's the premise on this? Kindly assist. I don't know the premise on that. Like that should not be the only information available there. There should be something in addition to that or more than that or something like that. to let you know what exactly is going on there. Okay, so that's it. Catch you tomorrow.